there's too many property experts out there who go on gut feel. And gut feel's got something to do with it, but you need to look at the numbers before you get gut feel. Yeah, people come to Australia from different countries like China and India and places like that, and they get a dose of the lucky country, what we call the lucky country, and they don't want to go back. And whether you love him or hate him, I'm going to talk about how he affects the economy. Trump is like no other president in America. I feel like I'm a news channel, not just a property channel anymore with what's happening, but I think you need to be informed. How long did Perth take to get to big as Perth? Like 100 years. And now we've got a Perth-sized population in like 5. The challenge is if the construction industry has to pay more, that means it costs more to build houses. So if you're a student and you've got a debt, guess what? You can get refinanced now. It's going to be very different. You're going to get a much higher borrowing capacity. You don't want to look at the price of a property. What you really want to look at is the actual percentage of interest payments percent to disposable income. Okay, so here I am. We're going live right now in our group. And I want to say hello, George Markoski, and welcome. Get yourself a beverage or your favorite drink or a coffee if you like it now, and get ready for an amazing show. We're going to be talking about the calm before the storm. And the storm I'm talking about is the property storm that's coming up. So if you're interested in creating money for life through property, you should be listening in. People in the group, if you're live, type in hashtag live so I know that you're listening. The people that watch the recording, typing hashtag recording. I'm also streaming live in our private group with our clients, which is great. So look forward to a good show. I'm going to show you some amazing stats that are going to really show you what's going on in the future. So let me grab my presentation. So this is the premise. Everyone sees the storm, but here's when to catch the boom. Because when the storm comes, everyone gets to see it. But what you want to do is during the calm before the storm, that's when you want to get your ducks in a row. Because let's face it, if there was a big storm and you didn't have everything prepared, by the time you see it, it's too late. And the tornado comes in and rips off your roof and does whatever it does, and you're finished, right? But if you're prepared, then you can take advantage. And that's what it's about. And we're about to have a big property storm in Australia. There's a few factors involved, and what I'm going to do is I'm going to go through the different factors and show you exactly what's happening and show you some stats about what's driving this storm and who the winners and losers are. And I'm going to show you exactly how to take advantage of the storm, which is pretty good. So here we go. So welcome to our weekly Thursday live, the Money for Life podcast. So look at this graph here, because I always like showing people graphs and showing them what's going on, because data is the key to knowing what's happening in the property market, because we've got these things called macro factors, and the macro factor is what's happening in the big scene. And then you've got the micro stuff, and then you've got the stuff that's happening in each suburb, which is more of the micro stuff. So what we do is look at the big picture of the world, what's happening in the world. Then we look at what's happening in Australia. Then we look at what's happening in each state. And then we look at what's happening in each suburb. And then the part of the suburb that we're investing in. And that's how you drill down. And what happens when you do that is you have a big picture and you're armed with the right knowledge and right data to make informed decisions, because decisions should be science-based, right? There's too many property experts out there who go on gut feel. And gut feel's got something to do with it, but you need to look at the numbers before you get gut feel. And really, at the end of the day, there's 15,000 suburbs in Australia. And out of those 15,000 suburbs, some are going up, some are going down. And what we want to do is we want to choose the winners, right? That's what we want. We want the winners, the ones that are going to go up. And really what we're looking for is capital growth, and we're looking for properties that are going to consistently double every 7 or 10 years. And how do you do that? Well, if you go in the top 100, then it makes it easier. And if you go in the top 100, then you can invest And when you invest in the top 100 suburbs out of the 15,000, you're guaranteed to do better than the other 14,800 suburbs in Australia, which is great. So international students flock to Australia. A record 1.1 million international students were enrolled in Australia at the end of 2024. Now that's nearly 250,000 higher than the 2019 pre-pandemic peak. Now, one thing we've got to realize about international students is they need to live somewhere. And that's the whole point of this, right? So international students need to live somewhere. For every 3 international students, you need 1 dwelling. So that means 1.1 million international students. I'm going to divide that by 3. It's around about 310,000 properties we need to house these people. And we've got an extra 250,000 than what we did last time. So that's nearly an extra 100,000 properties that we need. Okay, so the number of graduate visas on issue hit a record high of 222,000 in Q1 of 25, more than double the 2019 pre-pandemic peak. And you can see this temporary graduate visas on issue, and it's been growing quite a bit. The number of bridging visas on issue also hit a record high, driven in part by former students refusing to return home. So this is the thing. Yeah, people come to Australia from different countries like China and India and places like that, and they get a dose of the lucky country, what we call the lucky country, and they don't want to go back. Do you blame them? Like Australia is a pretty amazing country. Interesting enough, because I've left Adelaide and I've moved to Bali, and I live in Bali now, Indonesia, and now I've left, and now Adelaide has been voted the happiest city in Australia. Now, I hope it's not a coincidence of me leaving and now it's a happy city already. I'm not that grumpy. Okay, so if you look at this, right, a change in international undergraduate enrollments. I'm going to put my glasses on because there's some fine print here that I need to read. So Australia was the only major destination to register an uptick in international student demand over the first 3 months of 2025. So you look at these, look at the Asian countries, Australia, Canada, European, UK, US, right? The orange means enrollments were lower. The blue, light blue is the same, enrollments were higher than the dark blue. And look who's got the biggest dark blue, Australia. So we have got, our undergraduate enrollments in Australia, we're up 9% on last year. We've over 60% of institutions reporting increases. But if you look at compared to the rest of the world, we're way higher. People, one of our exports, or should we say imports? We export the education, but import the students. So it's a bit of an import-export situation here. But it's one of our biggest things and money earners in Australia, because what happens is, when it comes to the economy, you have international students coming, they pay fees, universities make money, they employ people to educate them, then these students get jobs, a lot of times with Uber and things like that. So they contribute to the economy, they eat food, they buy things, they do things, and it all goes up. So the markets have cooled on the RBA rate cuts. So Trump, you're going to hear me talking about a Trump a lot over the next 3 or 4 years, just letting you know. And whether you love him or hate him, I'm going to talk about how he affects the economy. Trump is like no other president in America, because what happens usually, you've got a president in America and they do something and it might have a little bit of a trickle effect. They might do 1 or 2 things in the 4 years they're in term. They might change taxes or do a few things like that. Trump, he's very active, very, very active, and he does a lot of stuff, and then he changes stuff as well. So because of that, but also he's very big on social media, on Twitter, in the news. Trump sneezes and it's in the news, the first thing in the news. So he's a big news thing. So because of that, he has quite a strong effect on the economy and the stock market and a lot of things. And early this week, the US and China agreed to massively reduce tariffs for 90 days while they negotiate a longer-term deal. So Europe tariffs now will be lowered to 30% from 145 and China's to 10% from 125. So right down, basically, they're going back to almost baseline, right? So what does that mean? Well, the RBA were worried about the economy because the tariffs were going to have a very inflationary effect on everything. And even though the RBA liked to raise interest rates to stop inflation, what they were doing now is thinking, okay, tariffs are going up. We need to hedge and actually start lowering. And they were, sort of pricing in 4 rate drops over the next year. But now the market is saying maybe it's only going to be 3, maybe not 4. So what does that mean? Well, if they were going to have 4, interest rates were going to be slightly lower. If they have 3, they're going to be still lower, but not as low as we expected them to be. So the financial markets viewed the 90% tariff reduction as a sign that peak tariff has passed. And they're probably correct. It has. So peak tariffs passed. Trump's cabinet started to negotiate countries. They did a deal with England already. And they're probably going to do other deals as well. And they're starting to do a deal with China, and they're going to start doing other deals. As a result, the future markets are now tipping only 3 more 0.25% interest rate cuts this year from the RBA. But this is the deal. We don't know what Trump's going to do next. He's just flown in to Saudi Arabia. Interesting enough. So what he did, he went to Saudi Arabia, Qatar, lifted sanctions from Syria. He's negotiating with Iran and trying to do a deal with them. So he just did a deal with the Houthis. So if you know about the Houthis, they've been bombing shipping because of the war in Israel and Palestine. And what's been happening is America started helping Israel bomb the Houthis, but then the Houthis started bombing American ships. America lost 4 of their F-18s. One of them actually just fell off the edge of a aircraft carrier. So then they did a deal with the Houthis and said, look, we won't attack you if you don't attack us. Let's do a deal. So the Houthis said, yep, that's fine. We're going to continue attacking Israel, but we're not going to attack you guys if you guys stay out of the fight. And they did. So Trump's now doing a lot of deals. He's stopped sanctions on Syria, which was surprising because the guy that runs Syria used to be part of Al-Qaeda. And now I think Qatar are going to invest like $1.3 trillion back in the US. Elon Musk, the guy from NVIDIA, Sam Altman from AI, all of them went with Trump to meet all these people in Saudi Arabia and also Qatar. So there's a lot of money going in. So that should be very interesting, what happens to the economy. But looks like he's really trying to get a lot more investment in America to build the economy. And I think this could work. What does that mean? Less volatility in the marketplace, which means that the tariff war is easing, which means our market's going to become more stable for now. I feel like I'm a news channel, I'm not just a property channel anymore with what's happening, but I think you need to be informed. So interest rate future markets are inherently skittish. You can see those grey lines is what people predicted and then what really happened with interest rates, right? So funny enough, the future markets are now aligned with CBA and Westpac, which have also forecast 3 more rate cuts this year. NAB is the outlier, and they reckon there's going to be 4 of them by third quarter of 2025. And they reckon that by February 2026, we're going to be down to 2.6%. What does this mean? Well, I'll tell you what it really means. When interest rates go down, property prices go up because people have got more borrowing power and people are less scared to invest and people are more excited about investing. So whether it's 3 or 4 doesn't really matter. The direction matters, and the direction of interest rates is going down. And when interest rates go down, that means we've got cheap money. And when we've got cheap money, it means more people invest. It's actually good for the economy, but it's bad for house prices because it's going to push them up because it's going to make money cheaper so people can invest more. So the Infrastructure Australia Project Dystopian Future. So 6 months before the COVID-19 pandemic arrived in Australia, Infrastructure Australia Australian infrastructure audit was released, warning that 40 billion a year of infrastructure investment is needed to catch up in Australia's voracious population growth. They also warned that Sydney and Melbourne risk grinding to a standstill as infrastructure struggled. Now, this is a big issue because if you're going to increase the population dramatically like Australia is doing, Australia's population is the fastest growing immigrant population in the first world. And now with Labor in power for the next 3 years, it's only going to get worse. If the Liberals came in, it probably would have slowed down a little bit, which I thought was a good thing, because I think we need to ease off and grow at a steady pace that's sustainable. But Labor are really big on getting as many immigrants into the country as possible. So that's going to put pressure on infrastructure, and it's going to cause gridlock if we don't build enough railways and we don't build enough roads. So, fast forward to May 2025, the nation's population has ballooned by 2.2 million since 2019. So that means we've had roughly one Perth worth of people move here in the last 5 years. How long did Perth take to get to big as Perth? Like 100 years. And now we've got a Perth-sized population in like 5. That's the magnitude of this. Crazy, right? And you can see this graph, you got the normal population increase, which we had from the 1940s and from up to 2000. And then since 2000, we had the Big Australia policy where we decided to get more people in, and it's been growing. Then you can see it dips all the way down in 2019 because of the pandemic. A lot of people went back to their country and we had no immigration. And then it suddenly went through the roof. Now it's sort of gone back down a little bit, but it's going to keep going up. So the public infrastructure workforce. So this is the thing, right? It shows that Australia has got a critical shortage of workers to meet the nation's infrastructure needs. What this is saying is we just don't have enough tradespeople to build the infrastructure we need. And what happens is, because we've got more people, we need to spend the money for the infrastructure. And this is the challenge. Where do you think those people come from? If you know, type in the chat. But what industry are we taking these people out of? I'll tell you where they're taking them from. The construction industry. Because the people in the construction industry, they know how to build infrastructure. Construction and mining. That's correct, Tristan. Exactly. What does that mean? Well, what this means, if they take people out of construction, then people, it's going to be, if they take people out of construction, it's going to be harder to build more properties. They take people out of mining. The mining companies got a lot of money. They can afford to pay more. The challenge is, if the construction industry has to pay more, that means it costs more to build houses. So if it costs more to build a house, that increases the intrinsic value of the house you already have. So if I build a house today, a brand new property, it costs me $300,000 to build. And then that same house in a year's time is going to cost $330,000 to build. That makes my house go up in value, an extra $30,000 automatically without me doing anything. That's not even including the land component, which is actually going up as well because of the supply and demand curve. So this is what I'm talking about, a perfect storm. You look at, if you look at what's happening, we got international students all piling in, coming into Australia. A lot of them don't want to leave and extending their visas. So, because what normally happens is they come, do their course, get educated and leave, but now they're coming and staying. Now, I've got nothing against highly skilled people staying in Australia. I think it's a good thing. It's we need to get the right demographic of the people coming into Australia, people that can really make a difference and make this country better in many ways. The thing is, then we've got the challenge of infrastructure, the pressure of that, and then the balance between, are we going to build infrastructure? Are we going to do mining? Are we going to build houses? And those three things are all fighting for the same resource, and we're not replacing the resource easily because Australia's got very high standards when it comes to construction and infrastructure and things like that. So it's hard to get people from another country to just come here and work because they don't have the right ability yet, and they need to get re-educated and learn how to do it. That's the thing. So the March federal budget projected that Australia's population will grow 1.8 million over the next 5 years. The Centre for Population projecting that Australia's population will balloon by 13.5 million people over the next 40. So this 13.5 million projected population increase will be driven by permanently high net overseas migration of 235,000 annually, which is more than double the 90,000 average net migration in the 60 years following World War II. So builder failures collapse on housing supply targets. The construction sector, and we were talking about this earlier, the construction sector leads the nation's insolvencies, with now 2,795 firms going under so far this financial year, representing an increase of 24% on 2024. So you look at this graph here, you got construction, and the graph has gone up quite a bit. But have a look at this also, right? Hospitality has gone up too, right? And you look at other industries. But if you look at the difference, it's construction that's leading the charge. So the collapse of around 7,000 builders and subcontractors in the previous 3 years has sustained the development industry and is exacerbating the housing shortage. Residential construction costs in the ABS, Australian Bureau of Statistics, producer price index have risen by 43% since the start of the pandemic, right? So this is the thing, 43% increase. Have a look at this, right? I'm going to just go through a few things. Electrical cable and conduit has gone up 71%. Terracotta tiles, 68%. Copper pipes and fittings, 66%. Timber windows, 63%. Timber doors, 56%. Metal garage doors, 51%. Plastic sand has gone up. Now, you think in Australia we've got enough sand, but it's actually gone up over 50%, 49%. Clay bricks have gone up. Ceramic products, insulation, waterproofing, concrete, plaster products, paint, everything's gone up. And this is all since the pandemic and inflation. So the Australian housing supply curve has shifted to the left, increasing the cost of construction across all price points and reducing output. So you look at this median lot prices. So land is more expensive now. So used to be, if you look at here, now what I want to show in this graph, and see, so not only construction, but land's gone up quite considerably. And because of that, that's also a challenge. See, the last 10 years, Sydney, the average median plot was 325,000. Now it's 710,000. So before you know it, the average little bit of land in Sydney is going to be $1 million, right? Now, Australia has got the largest houses in the world. So if you look at USA, UK, New Zealand, Canada, everyone's got much smaller houses. We got big houses here. And that's part of the reason we're more expensive, because we're bigger. Yep. So under such conditions, the Albanese government's housing target of 1.2 million over 5 years cannot be realised, because he's missed it every single month since he started. Not only that, at the moment, we're 300,000 in deficit, but they expect us to be nearly 500,000 homes behind the 8 ball in the next 2 years. Now, there's another thing here. Even though we've got a housing shortage, we've got this issue of unsold apartments, right? So I'm talking about high-rise apartments, and that's why I don't like them. The only people that make money at a high-rise is the developers. So constructing apartments is too expensive. So people can't buy them at a reasonable price. And detached houses and townhouses are just better deals. They're better deals because they go up in value more. They're a better investment and people prefer living in. But if you look at this, also, the other challenges is, one, construction quality of new apartment complexes in Australia is also very poor. Strata fees are high, and apartments also take too long to construct. So it takes nearly 3 years from building approval to actually build high-rise. That's a long time for people to wait. A lot of things can happen in those 3 years. And look at this. There are actually 8,000 completed apartments in Melbourne, comprising 17,000 of units completed between 2020 and 2024 that developers have been unable to sell. And this is why I say don't buy high rises. You know, you get those big glossy brochures and people saying, oh, what a great investment, buy a high rise. No, they're not. Because they haven't even sold them. The Victorian state budget has earmarked 11.5 billion of funding for the first stage of the suburban rail loop, which will come over from value capture levies on 70,000 apartments. So the Victorian budget, the Victoria state budget, what they're doing is they're building the suburban rail loop. And along the rail loop, they're going to be building 70,000 apartments, even though there's 8,000 completed apartments in Melbourne that have not been sold. And what they want to do is they want to pay for the loop from the apartments. So they're going to be, so if you look at $11.5 billion divided by 70,000 apartments, that means they're going to have to get $165,000 per unit to pay for this, which is pretty crazy. Now, Aussie house prices are projected to rocket higher because now we've got increase in mortgage borrowing power due to Albany's government lending standards change. So the Albanese government recently instructed lenders to disregard student debts when assessing mortgage serviceability, which will lift borrowing capacity. So if you're a student and you've got a debt, guess what? You can get refinanced now. It's going to be very different. You're going to get a much higher borrowing capacity. And see, the combination of falling interest rates and favorable policy changes looks to ignite another house price boom. And real estate agents are gearing up for house price boom right now. There's a lot more people. Real estate agents have noted that there's been a marked increase in the number of homes listed for sale in the last weeks alongside buyer inquiries. So 1% reduction in interest rates are going to reduce the average interest paid on households by around 1.5% of disposable income. Right? If you look at this, Australia household interest payments per percent to disposable income. So if you look at back in 2007, that is the peak of the graph. That's when property was the most expensive it ever was in Australia. Because you don't want to look at the price of a property. What you really want to look at is the actual percentage of interest payments percent to disposable income, because that's the real number, because that shows you where we're at. So if we look at the graph here, we're currently 2024 and we're at 10%, but it looks like we're going to drop it down to about 6.5. What does that mean? Well, I always talk about the gap in the market, and the gap in the market is where you make your money. And if you look at 2007, you look at this 13.5%. And if you rule a line up top here, there's a gap between where we're going to be and where we were in 2007. And that is the latitude of how far the price can go very easily. What does that mean? It means this is the calm before the storm. We've got a massive gap, and that gap's going to be filled. So it means there's lots of room for property price to go up quite considerably. Now, the Help to Buy scheme, which is coming in very soon from the Labor government, which is going to provide 10,000 first home buyers with and 40% of the purchase price of a new home and 30% for existing homes per year. That's going to make a little bit of difference too. And then they've got coming in January 2026. Mark this in your calendar, because if you've been thinking about investing in property, if you look at everything I've said, the 1st of January 2026 is going to happen when Labor allows first home buyers to have a 5% deposit. This is going to be huge. It's going to be very big, and they're going to go in and they're going to go nuts. And there's going to be a massive boom. That's when the storm hits. So you literally got from now, May 15th, June, July, August, September, October, November, December. You have 7 months to get your shit together and invest in property and make money before the big boom that happens. And there's going to be lots of other things on the way, but this is the big one right there on the 1st of January. So for the people watching my public channel, if you want to take advantage of the boom before it happens, type in #boom and my team will reach out to you. Type it in the chat. And I'm going to go now into our private group and we're going to talk nitty gritty and work out what areas are actually going to go up and which ones, what's going to happen there and everything else like that. Thank you. Bye-bye.